Good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, July 25th, and I hope you guys had a wonderful weekend here. And, it's going to be kind of short and sweet today because, you know what, no economic news releases today. So what we'll do is go right to the headline news. And, the big thing for headline news is, well, we're at the 11th hour on the debt crisis now, still actually. So Congress still hasn't done anything about it, and they're bickering as usual. And until they get something done, the markets are in shambles, really. So this is pretty big. So let's hope that they get this resolved sooner than later. And then also, last week we were talking about the euro going ahead and creating another package for the bailout package for Greece. And basically, one of the things I kind of read on MarketWatch was that there could be some negative implication to other countries that don't have AAA credit rating after the euro bailout, and that a lot of it has to do with, okay, now you're kind of condoning that there might be this restrictive default. So uh, what about these other countries that don't have that higher rating, and is it okay for them to default in certain ways? So that means obviously they're going to raise yields and such. It's going to probably have fewer investors, or if investors do come in, they'll probably obviously have higher yields. Are going to charge them more money to be able to borrow money. So it could have some negative implications out there. So as a result, of course, I just said stock market's down this morning. A lot of it has to do with this, again, debt ceiling that needs to be resolved like ASAP, because August 2nd is next week. And if we don't have some resolve for that, we're kind of, obviously things will come into play. I mean, basically, U.S. will be downgraded, and our bonds and our interest rates, everything will go up, become more expensive to us here in the U.S. as well. So, and then on top of it, the default also means people who have Social Security, Medicare, stuff like that, receiving from the government, basically won't get paid on time. So. So in this case, let's go ahead and take a look at the bond market and the interest rates. We have here still, in my opinion, I still see kind of like a downward trend here, because even though it shows plus 12, but we started the day off about 22 basis points off from when we left off on Friday, after we had a slight rally. Not much, but but we start off downwards today. So this isn't great news. So interest rates today actually worsened. So they actually went in a negative manner today, unless we get some improvement here. And looks like we're starting to see a little bit more here, but still, we're going to need get back up to obviously this level to be at the same pricing what we were at on Friday. So another 20 some basis points to move upwards, and obviously we need a lot higher than that. And the only way we're really going to be able to have some. So expect a lot of volatility this week, and maybe next week if we don't have anything resolved regards to the debt ceiling. So watch that, and after we get that resolved, we'll have probably a little normalcy. But right now, we're not having a normalcy in the market due to the government's impasse with the debt ceiling. All right, folks, you guys have a wonderful day. And again, if you're out home as a home buyer, or you're out looking to refinance, visit my website, californiamortgagetips.com. You'll get a lot of great information. And if you have any questions, feel free to give me a call. Thanks.